Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin. What an interesting market this is. My goodness, slept through some nonsense. I'll tell you what. We got a rejection pretty hard off 31,500 all the way down to 29.9 in less than 5 hours. So that is a crazy market. That's averaging 1% movement per hour. That's actually quite high when you think about volatility compared to other markets. That's actually quite a lot. So interesting stuff here from Bitcoin. Glad we missed out on our short opportunity because it would have wicked up and hit the stop loss. That's what happens all the time, by the way. And unfortunately, this market right now is just kind of it's latent with it, right? We see this happen all the time. So it's important to be very careful with your stop losses and obviously monitor your trades. But generally speaking, we did have some good trades here recently. Unfortunately, our Litecoin and XRP targets were not hit because, of course, the targets, well, technically the targets were hit. We just didn't get filled on those two trades. So unfortunately missed out there, but good news is our PCH trade took 8% profit 9 hours. So we did catch some good stuff here from that little situation there for our Premium Plus members. But at this point, that's an interesting little scenario nonetheless. Okay, so we're going to take a look at some back-end stuff here, see if there's anything really obvious and glaring here for us. And then also take a look at a few other patterns and just generally speaking, best practice and big picture. So if you're new to the channel, welcome aboard. If you've been watching for a while, thank you so much for everything, obviously. I've got some members who have been watching me for almost 3 years now. It's really, really cool. So comment below if you've been watching for how long. Love to hear it. If you don't, that's okay too. Thanks again for joining me here. So what we want to do is look at a few things. First of all is the big picture MACD here. So this is something that's kind of ominous. This is a somewhat of a telling sign that we could see a potential downside here. Now again, in its history, when we have a MACD convergence or divergence, it doesn't necessarily just drop like a rock because it's diverging, but it does have a tendency of swinging and shifting momentum. When we look at this is a pretty big momentous uptrend from 25,000 or even lower previous to that. If we take a look at some other times too, when there was a divergence, for example, we can see the price diverged here back in April and it continued higher, right? So again, just because there's a divergence doesn't necessarily imply the price is going to drop, but it does tell us that that's a sign that the price should have further downside potential than upside. Just, again, a slightly larger probability of the price moving down. So just something to think about there. Oh, and you know what? That reminds me too, because I get a lot of questions about BingX. I just kind of throw this out here. If you do register with us, yes, you do get the $50 bonus when you deposit $50 or more. You also only need to really reach $3,000 in volume for a $100 bonus. So it's really simple and easy for that. New users benefit from that if you use my link down below. There's also like a 10-day challenge here where you can claim all sorts of rewards as well if you want to use their exchange. So to anyone already have registered, be sure to check that out. I'll include the link down below for this, but it's a pretty cool little thing for our community members. Check that out, of course, if you can. Now, what I want to talk about though is the high block capital, because there's some interesting things here. Okay, so first of all, we've got increased amount of volume. We know what that means. More volume, increased volatility. Obviously, we've seen that, but we see this doji candle forming right now. Okay. That tells us that there's this indecision in which direction it wants to head. But in most cases, if you are trending down and you have a doji candle, the price will likely reverse. Now, again, this isn't an upswing or a downswing by any stretch. We're range bound, so it really doesn't matter too much. But we are seeing that there's a very strong bullish strength at 30,000. There's also a lot of bearish strength at 31.5. So no matter how we look at it, we're tentatively range bound. Until we break that range, we can expect the price to continue to maintain itself. Okay, this is something that's interesting here. We've got a lot more longs closing their position than opening today here. So this is basically, again, just open versus closed. This doesn't mean that they are effectively shorting, but it pretty much kind of does mean that if you look at the overall amount of shorts. This is the aggregate amount of shorts across the market here. We can see a lot more shorts are open at this point. Now, those could be the shorts that were open from 31.5. They could also be some late shorts. Let's go ahead and see what that looks like. Because again, when it comes to longs and shorts, we can see, look at that, 31.5. Some late longs there at 31.5, just getting hammered and wrecked. You can see a lot of them closing their positions on the way down. So they got fully liquidated. That's pretty common, unfortunately, with these type of swings. Now we can see with some shorts, some early and late shorts are both in the green right now. Hopefully they're taking some profit, but you can see a majority of the shorts were hedged at 31.2 when we had this little dead cat bounce and the price continued lower. Okay, so you can see that pretty stark, obviously on the 15-minute time frame. There's actually, I'll show that to you in a minute. There's actually a pretty obvious sign that the price is going to continue lower. I wish I wasn't sleeping at that point, but again, you cannot stay up all night long. And if you're the kind of person that can do that, kudos to you. But I can tell you what, good night's sleep gives me a better edge on trading. because if I'm tired, I make poor decisions, and I just recommend you get a good night's sleep when you trade. Okay, anyways, let's go ahead and circle back around here to the big picture. So looking at the RSI and stochastic, this is something I kind of want to just touch on here. We got a massive downswing here for stochastic. It hasn't started to uptrend yet, so it doesn't give us any kind of long potential signal. We're still a ways away from that, but honestly, I never trust the first one anyways. It's oftentimes the second one you want to get into. So for example, here's a first divergence, and here's a second. If you look at the charts, you can see the price goes sideways, and then the second one was a much larger drop. So oftentimes, to me, looking at stochastic RSI, when you look at that, the first one I wouldn't trust. Second one I would say is more so trustworthy. So again, unfortunately, that occurred recently, and we didn't really kind of get a chance to get in the market at that time because it was at an all-time high. But once again, or sorry, most recent high. I know we've all-time high at 69,000, but what I'm getting at here is the money flow is coming down. RSI is tapering off. So it makes sense for the RSI to continue to progress lower at this point. So I wouldn't expect a massive bounce here. I'm speculating that we're going to see the price continue to reject at 30,700 or 600. So today, in my opinion, would be an awesome place to consider shorting, just based on what we see here so far. Again, MACD divergence, money flow index coming down. We've got stochastic still giving us the indication that we could have further momentum to the downside. So I see a lot of reasons why the price could come down lower. You got to recognize, though, that we did wick down almost to touch this simple moving average of the 20-day SMA, or the 50 if you use the EMA, of course. They're both kind of averaging themselves out the same place. But what I'm getting at here is that this is a common place for the trend to either establish itself or to break. So I think it's inevitable for us to break down below this unless the price can wick up and start to continue to make higher lows and just close somewhere in the range of 31,000 or higher. Until we get like a closure above 31,000, I'm not really sold on this happening. Okay, so to me, I feel like we're going to test that and inevitably break below. That would be a case in point to definitely short if we get below the 20-day SMA. That's just, again, something I'm looking for, right? Not a guarantee, but definitely something to pay attention to. Touching on the weekly high, open, low, close, we can see here as well that right there at the current price point, we're seeing somewhat of a resistance and or support. So again, we got that 30,500 to 30,600 range that is essentially holding fairly strong, if you will, for support and resistance. We can see the price kind of average itself out there, broke above, broke below, and now it's kind of doing this little heart monitor thing. So I'm sorry. I'm trying to hide my frustration, but it's so aggravating when you have these kind of, I wouldn't say missed opportunities, but just how strong and fast the market is moving in either direction within this range. It's got to suck if you're like, taking a tight trade and you just get wicked out and then instantly goes right back to where it came from. That is frustrating. But those things happen too, and you got to learn to roll with it as well. Am I frustrated? No, but I do want to have some better opportunities here, and it doesn't seem like there's a tremendous amount with these really ugly candle wicks. Anyways, conversation for another day. Let's look at the 4 hours, see what's going on here. We are now, still below 50 on the RSI. We wicked up there, of course, with that nonsensical uptrend there. We're still remaining below 50 on the RSI. Stochastics looks like it wants to turn itself around, and money flow index is low. We can also see MACD kind of had an MACD FU there where the price action rejected off that level. So all in all, nothing great here on the 4 hour either. I would still say we're slightly bearish on the 4 hour too. So all in all, there's not a lot that we can kind of disseminate here that's telling us that we're in good shape. We're below both moving averages, at least the key ones. The 200-day SMA is down at the 28,200 range. So again, that is an important factor to note. We also can recognize this on the daily. The 50-day SMA is close to 28,000 as well. So to me, I think we're going to have plenty of support at 28,000 if the price does come down, because we got this previous support range there where the price action created a higher high and couldn't continue to hold it. So again, right there, I think low 28,000 range should be our bottom if the price does come back down. Again, we got to lose 29.9 first, and it seems like there's a pretty strong support level there for it. All right, so taking a look at the 1 hour, let's go ahead and wrap this up here for you. See what TD sequential tells us. We're about a 4 right now. The chance we might get a reset here. But all in all, you can see we came up to an 8 and dropped like a rock. So we kind of had this overextended state throughout the evening, or obviously early morning, depending on where you're at. But generally speaking here, this makes sense for it to come down here. But I would think that we're going to probably see a rejection at this level and the price come back down. So to me, I'm still looking at a good opportunity to get in as a short at about 30,600. Hoping the price comes up a little bit further and just gets us a little bit more momentum to the downside. We want to look at this here as well, the Ichimoku cloud. If I recall yesterday, or pretty much for the last week or two, we've been fairly well range bound within this. And since we are range bound for roughly the last 10 trading days, you get a lot of false positives with the Ichimoku cloud. But the key takeaway here is that the lagging span is intersecting with the price action, so that tells us a short position isn't super viable right now. It also confirms that the baseline and conversion line are kind of together. And when they're together, it really just implies there's indecision and you don't want to take a trade. Furthermore, we have the actual cloud here, right? Now, typically that's a positive sign to be below that for a short. But again, it's still somewhat of a false positive considering the fact that we're jumping up and down. I mean, look at this nonsense. Up, down, up, down. It just keeps kind of happening where we just keep breaking above and below the cloud. So no definitive direction can be determined based on what we see here so far. What we have to do is use larger time frames to identify that. And if you look at the daily, we're mostly bearish here with our MACD and our RSI coming back down. We can even look at the weekly here too and kind of note a few things as well. Is just that we're still under 70 on the RSI, so we kind of got rejected by that level. We're roughly kind of at the 63 mark, so not a lot to note there. But if I recall correctly, the simple moving averages are roughly at about 27,300. So again, we got plenty of room for downtrend. And if we look at a little bit larger here, we can see that there is not a lot going on here. Okay. So ultimately, what we're kind of seeing here is just the overall sense here is that the big picture is bearish. Okay. The macro and micro, or just say smaller time frames, they're giving us some false positives. And a lot of times you kind of have to go with the big picture on this one. So unless we really go at the 15 to 1 minute time frame, which is unnecessary at this point for the type of trades that we're taking, I would say that we would gravitate a little bit more towards the price coming back down. It makes a lot more sense for the price to decrease than increase here at this point. This large candle wick up tells us that further downside is more probable. We want to pay attention to this 20-day SMA and see if that will hold. If we break through that in the next couple of days, I would say shorting to 28,000 range would make sense. For right now, shorting to the upper 29s would probably be the more ideal scenario, just to ensure that you take some profit along the way. But as per usual, always recommend multiple targets and make sure that you are trimming your positions as you get further into them. And make sure that you're not just holding on too long and getting too greedy. Because right now it's not really a greedy market, as you can tell. Well, the greed is real for those who control the market, right? That's a different story. We can count on that. But as far as us getting greedy, we got to work within the means of what they're doing. And right now, it's currently range bound between 30,000 and 31.5 until the market proves otherwise. Okay. So again, we got to keep that narrative here at this point. I would say be careful with some long positions at this time. I think shorts might be a little bit more realistic, okay, just based on the way that things have been behaving. So again, those are my 2 cents. I hope that works well for you. Thanks again for joining me here. If you watched all the way to the end, congratulations, kudos to you in trying to become a better trader, honestly. And if you are trading with BingX, make sure you take advantage of this trading challenge. I'll link this down below so you can get more details there. And then of course, obviously, if you haven't registered with them, again, the reason why we use them, just so you know, is that KuCoin, Bybit, and obviously even BitGet, some of my favorite exchanges, are requiring KYC and kind of damaging the opportunities for those in the States or even Canada as well. So no VPN or KYC required for these folks, and we are looking at a $50 deposit with a $50 bonus if you do so. Okay, so again, cool stuff there. Be sure to check that out. Link down below. This is only available until July 31st. All right, I hope you have a good rest of your day. Thanks again for joining me. We'll see you in tomorrow's video. Good luck out there.